Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 6th of August. All right, now we had a pretty eventful sort of Friday. US non-farm payroll numbers came out a little bit, let me just actually go to the numbers, it'll be easier for me to show you. A little bit softer on the actual payroll number itself, and that led to a little bit of US dollar weakness, and that was sort of partly expected. I had the range false break strategy on the euro, and it actually played into that really nicely. But then I was also short sterling, and that didn't particularly do wonders for that. So just looking at the overall numbers now, the prior number here, 4%. So they're focusing on the lack of, the rate improved, basically, put it that way. The 3.9 was expected, but it is another improvement in the overall rate. The average earnings, which have been a very important focus, just came out as expected. So that didn't really impact too much. If anything, just the miss in the non-farm payrolls itself, they're expecting 190, came out 157, and that was enough to really give the dollar a little bit of a kick against the major pairs. So I'll just come back across here to look at the price action. You can see definitively Aussie and Kiwi are sort of thrashing about here. Now, let me just get my pen up. Okay, so Aussie was in the middle of sort of nowhere. Non-farm payrolls sort of just jump above that short-term resistance line. It hasn't gone a hell of a long way, 30, 40 points at the time, and just sort of sat still. And that's probably partly due to the lack of, huge variance in the numbers. Kiwi also, market was looking for a stronger US number, didn't get it back into the range. Dollar yen now starting to come into play with the increase in tension between China and the US. But the non-farm payrolls there, the dollar, lower against dollar CAD and dollar yen, which you would expect. Now the euro, as I sort of mentioned in the reverse, the range false break trade on Friday, this was a really good opportunity. Euro is just going down. So even with weak numbers, this is where, hopefully you go back and have a look at that trade setup. It's a really nice one where euro, regardless of what happens in the US, of course, if it was massively weak numbers, then the US dollar would have got hit a lot harder. But it was not enough to turn around the euro, and it's still sort of tracking lower. Sterling, I thought for all money, once it broke down through 130, the figure, it would start to slide. There's just a few too many other loose variables around. Obviously, Brexit is coming up. Even the Bank of England governor has now come out, after these moves on Friday, come out and said basically, we may be leaving the EU without a deal, which is, I actually don't think it's too bad a thing. You work things out pretty quickly when you need to. So, but anyway, that was a bit of a negative. I expect sterling to keep going down, but after the non-farm payrolls, it did spike up to 130.40. So a lot of people who were short, including me, got smashed on the back of that. All right, so this is where we start the week. Now, you've got to think, okay, we've got the major currency pairs here. I need to sort of tune up some of these charts and just get some, fine-tune the support and resistance levels. Just on the Aussie, we've got that new support line. Kiwi, well, that one's been broken down through. I like we've got a new low here to focus on. So I'm just a matter of dragging that across. And I'll come into the news in a minute, but there is a fair bit happening. Okay, dollar yen, well, it has come down through that trend line. It's just sitting in the middle of the range there at the moment. Euro, it's tracking nicely, right? It's tracking lower nicely. And then you've also got sterling, which is still sort of gravitating towards 130 the figure. So to me, it almost looks like there's some massive option structures around 130 the figure, worth keeping an eye on. But you know what? I still think this is going lower. Brexit is not going to be helping sterling at all. And now down through these fresh lows in the low 70s there. I think we'll get it once it does break down. Probably through that low 129.73, or even the previous one over here, which was just in the 50s, 129.55, I think it was. And then once it goes lower than that, there's nothing really to hold it up. So it's really going to be looking for some direction there. If we get some weak geopolitical issues out of the UK, which is a pretty good chance, then we will see sterling start to track lower. Now, the dollar CAD, just treading lower, but oil is a bit all over the place. And as I sort of mentioned, dollar yen is now sort of starting to come into play with a whole range of argy-bargy stuff coming on board from all different directions. But mainly, I think this is the way we're going to see for the foreseeable future is, you're going to have a lot of constructive or destructive comments from China and Trump. This is going to be a bit of turning into a real tough battle. I think it's going to be interesting in about 2 or 3 months when these tariffs really start to impact China. That's when it's going to go get really nasty, but also we're going to see some really good moves in the currencies. And this is where the offshore yuan, dollar yuan, is really going to come into play now. China have taken some measures. They've increased the requirement ratios for short yuan positions to stop traders having short yuan positions, I think up to 20%. That should see a lot of the local banks who have been shorting the yuan, that'll slow them down from getting short. And then when you sort of have a look at what the impact has been, okay, you've got, the equity markets did start to go into the green. They're sort of sitting just below in the red at the moment. But if you look at the yuan here, right, so everyone's just got absolutely, it went through the roof. Don't forget, this is dollar China. So it's actually, when you're thinking of China, it rallying means it comes off. So you can see what's happening here at the moment. And this is actually starting to really be the main driver of movements on the Aussie and Kiwi during the Asian session. Now, today's an Australian bank holiday, so I don't expect too much activity on the Aussie, nor the Kiwi for that matter. But this is where we're going to start really focusing on dollar yen. It's got to come back into play as a bit of a safe haven there as tensions do rise. The dollar index is starting to look pretty perky. To me, it's heading back towards 97. It's just a matter of waiting for the numbers to drop. And you know what? The fact is, the Fed is still on a hiking scenario, even though the non-farm payrolls number missed. But you know what? There was an improvement in the unemployment rate. The average earnings are still quite robust, so they're on track to raise rates 2 more times for this year. And those non-farm payrolls are a big, important number for that. So just bear that in mind as we go forward with the trading this week. So if you come back into, have a look at the key data here now, it's pretty easy to sort of work out where the main focus is going to be. And it's definitely in the Asian session. If you have a look here, we've got the RBA followed by the RBNZ, the inflation expectations, then the RBNZ meeting. We've got Chinese CPI numbers. Now, this is probably too early for these tariffs to start impacting the main Chinese numbers. They will probably the following month. So just keep an eye on this. But this is obviously very important for the Aussie and Kiwi. And then you come back down. We've got the wrong flag there for the RBA monetary policy statement. And then we've got some manufacturing numbers out of the US as well. So plenty to look at this week, okay, as far as fundamental drivers. US CPI numbers, that's the one I was sort of looking for. Later in the week, that's obviously a very huge number. The last key number that the Fed will probably look at, before anything else happens. So we've had the non-farm payrolls. You put the consumer price index. If inflation's up, well, then it's definitely 2 times, potentially 3 more hikes from the Fed, which would be a big call. But you never know. So, and then later in the week, so obviously the first part of the week is definitely going to be focusing on the Aussie and Kiwi. Then we switch back over to UK for the manufacturing numbers, and then US CPI and Canadian employment numbers. So pretty good fundamental drivers. Now, what we've got to do is just connect the dots, right? If we look, what I'm talking about with those dots, what we're looking for is just, we're looking for the core fundamental stuff. Now, when we're looking at Trump, he's going to be making his comments during the North American session, if not after the market closes. And China will be doing theirs during the day. So just keep an eye on the developments with the yuan. Obviously, as I said, the real impact from these numbers won't really come up for probably a month or so. And just reading through a few sort of various columns, they are expecting the commodity market to show up the impact of those tariffs first and foremost. So we'll be watching that very closely. And if commodities get hit, as in China aren't making as much, well, then you can be pretty sure the Aussie and Kiwi are going to come off as well. That's probably the easiest trade out of all of them. All right. And that's pretty much it, guys. It's a pretty mellow start to Monday, which is always good. Now, as always, make sure you tune up your charts. Start to really get in here and nail down your major support and resistance levels. It's too early at this stage on a Monday to sort of work out where the momentum is. You can see how quickly the weak dollar, US dollar momentum stalled on Friday. It was over within an hour or two. The whole number was out. As I said, Euro's got sort of nice clear direction on the downside. Sterling's heading south, but it's got a lot of geopolitical back-end baggage. Dollar CAD, I just don't know about the CAD, NAFTA, OPEC, US dollar tensions. It's a bit hard to call. And then we've got dollar yen, which was more of a result of weak US numbers than anything else. So I think it's going to be trading sideways, but just keep an eye on these trend lines as those tensions between US and China come into play. It's got to really jump out of the charts and should really sort of pick up some momentum, I think, to the downside, if anything. All right, and that's pretty much it, guys. Not much else to do today. As I said, the main focus, going forward just right at the moment is going to be Tuesday with the RBA. That's the first major release for the week, so make sure you sort of tune in for that. Now, the RBA have been very passive the last sort of 12 months. It'll be interesting to see what they come out with from here on in. And outside of that, the trading conditions, the market performance, as in the price activity and the volatility is pretty good. So we've still got pretty good trading conditions. All we need is to pick up in momentum. If anything, the weak US non-farm payroll number was a real bummer because it just put the currencies back into the range where we had a potential. If those numbers had all been strong, we could have seen the US dollar rally through the roof and give these currencies a real trending opportunity. So at this stage, the trend isn't there, but we still have a few things to work with. So let's just see how that goes. All right, chaps, have a good trading day, good trading week. We'll see you in the trade zone. All the very best. Cheerio.